Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The Fed holds rates with Chair Jerome Powell pointing to an improving U.S. outlook as the labor market steadies. Powell also advised his successor to stay out of elected politics. Gold, copper, and silver hit all-time highs as a weaker dollar and rising geopolitical tensions provide fresh momentum. And the world's largest tech firms are ramping up spending on AI. Meta's $135 billion capex plans boosting the likes of Samsung and SK Hynix. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Barsechi in Dubai. So much to talk about has happened a lot in the U.S. with the earnings, but I also want to bring you some earnings coming through from Europe. A significant software company in Europe and Germany, SAP, their results coming through now. Just to give you some ideas on their cloud revenue, they have come in at 5.61 billion. That is the cloud revenue number. The estimate was 5.64 billion. So marginally below estimates, basically in line with estimates. And then we're also getting revenue guidance for the year for 2026. They see non-IFRS cloud revenue guidance 25.8 billion to 26.2 billion. That is the guidance that they're giving for the rest of this year. See stable sales on a comp basis for 2026. Ultimately, though, in line with estimates so far on revenue. They're providing a little bit of guidance as well. The effective tax rate of about 29%. So again, some outlook for the year. And in terms of, let's see, other metrics that are coming through, the profit margin is expected to stay at the prior year level. So they're not changing their guidance for where that profit margin is going to come through for 2026. So these are some of the figures that are coming through from SAP. You can see the performance of the stock down 27% over the past year. And this morning we are getting revenue numbers basically in line with estimates. And we'll be hearing from the SAP CEO this morning. Christian Klein will be speaking to the opening trade at 7:30 UK time. That is 11:30 a.m. across the Emirates. So mark your calendars. Okay, let's check in more broadly on markets. I'm going to start with the Fed. We had the Fed meeting yesterday. As expected, they did not cut interest rates, but there were two dissenters. And you could say those are the ones that are perhaps more politically or ideologically aligned to the White House. You had a dissenter in the form of Stephen Myron and in the form of Chris Waller, who actually saw his odds of becoming the next Fed chair go up after the meeting. But anyway, the point is, the Fed didn't do anything. The language was slightly more positive about the state of the U.S. economy. We did see the S&P briefly tick up above 7,000, slightly dip below by the end of the day. But S&P futures this morning up 0.1%. NASDAQ, a lot of focus on that index today. We are up 0.2%. A lot of earnings hit yesterday, including from Microsoft, from Meta, from Tesla, and from IBM. Mixed bag in terms of performance. We saw a very positive reaction from Meta, not a strong reaction from Microsoft. And actually, interestingly enough, even though Tesla recorded a decline in EV sales, the reaction in the stock was positive. So again, a lot to unpack on the tech side of things today. And take a look at Brent. We are back up to $69. Who would have thought it a couple of weeks ago? More geopolitical risk premium being priced in. Trump once again a warning about the armada that's getting close to Iran, saying that time is, quote, running out. So on the back of that, Brent almost back up at $70 this morning. And then not a day goes by where I can't speak about precious metals. There you have it, gold, another fresh record high through 5,500 this morning, up 2.6%. It's not just gold, silver as well. And then copper this morning also up 5% too. So all of these commodities just continue to rip higher. And the question is, how long can we keep up this momentum for? Switching over one terminal chart that I just wanted to flag to you today, and this is pertaining to the Fed, since I was just talking about it. Right now, as you can see, the white line is Rick Rieder's odds. So they've come down a little bit just in the last couple of days, but essentially he is the front runner, but very, very close to Kevin Warsh, who's sitting at around 32% odds. Chris Waller, who I just mentioned, one of the dissenters yesterday, we saw that little uptick after the Fed meeting, sitting at around 15%. And then Kevin Hassett, whose odds seem to have come down dramatically in the last couple of weeks, only around 7. So right now, it seems to be a race between Rick Rieder and Kevin Warsh. Okay, let's check in on how markets in Asia are faring. Min Lo is on Hong Kong for us. Not just tech earnings out of the U.S., we also got some significant earnings out of Asia too in the semiconductor space.
That's right, a lot of tech earnings to digest, and here you can see looking pretty mixed in Asia. Here we have Advantas reporting earnings, very strong numbers. We have SK Hynix also reporting the strongest quarterly earnings on record, and we have Samsung as well beating expectations, and yet we are seeing that stock actually down today. A lot of institutional selling, retail investors are buying in. You can see the Nikkei up by just 0.1%. We're not seeing the sort of broad-based tech rally given the sort of results that we are seeing from the company earnings. So perhaps a signal that maybe there's a bit of overheated sentiment here in the tech sector. But flip the board, we are also digesting the big story in China is the property story, because we're getting local media reports that some developers no longer need to submit the monthly so-called three red lines indicators. Now, these are metrics that the regulators introduced back in 2021 to rein in the over-leveraging in the sector. And you can see here, even the most beleaguered property developers like Vanke also up by about 8% here, and some of the biggest gainers looking at double-digit 27% gains. Really a big shot in the arm for the property sector in China, a big recovery in market sentiment here.
Winnie, thank you so much. Min, sorry. We've had Winnie the last couple of days. Min Lo, thank you so much. Min Lo in Hong Kong. Well, let's go back to the main story overnight. The Fed kept rates unchanged yesterday and signaled a cautious outlook.
The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. There was broad support on the committee for holding today. Broad. We will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases.
I'm wondering what advice you have for whoever your successor might be.
Stay out of elected politics.
The FOMC voted 10-2 to hold rates in a range of 3.5 to 3.75%. The two dissenters were Governors Chris Waller and Stephen Myron, who favored a quarter-point reduction. For more insights on the Fed's policy outlook, joining us now is Parisha Saimbi, Asia FXLM Strategist at BNP Paribas. Parisha, if you listen to the language that came through from the Fed Chair Jerome Powell, to me this doesn't sound like a Fed that is inclined to cut rates at all. The language is pretty upbeat and also probably quite difficult to justify a rate-cutting cycle given the economy is doing so well and inflation is still way above target.
Yes, we completely agree. So actually, just overnight, we changed our call for the Fed, and we're no longer expecting any more cuts for them for this year. Previously, we were looking for one more. And I think it really does center on the fact that they did deliver a more upbeat message. They seem to have found some newfound optimism around the labor market. And I think the fact that there was broad support for a hold, and I guess this idea that perhaps data has proven to be quite strong in the last couple of months is reinforcing that point. So with many perhaps questioning whether rates really are restrictive still at this point, I think for now, especially given that data outlook that we mentioned that's robust, inflation that's looking quite sticky, we think that they are likely to remain on hold now. Okay, so that's the call. Is it going to be influenced at all by who the appointment of the next Fed chair is going to be? I'm sure you heard me running through the top who the favorites are right now to take over from Powell. Never say never, but ultimately we do think that the Fed will continue to make policy based on the economic data. So we do think they will retain credibility. But of course, markets can always price in some risk. And that's why, broadly for our outlook for the dollar, while we have a more balanced view on the dollar as a whole, we do still see a fatter downside tail risk for the dollar compared to the upside. Parisha, who is selling the USD? Why has the move been so dramatic in the last 10 days, down 3%? Is it institutional? Is it central banks? Is it hedging that's going on? Talk us through exactly who has been selling the greenback. I think it's quite a broad-based mixture of investor types, to be honest. But I would say that with the moves that are happening, it may continue to be reinforced by further real money accounts, perhaps looking to hedge some of their US asset exposure. And we saw this even in the kind of bout after Liberation Day last year, where this momentum continued. And these investors can be price sensitive. So as we break higher in, above 120 in euro dollar, these investors may feel increasingly a need to hedge their US asset exposure. But I think as well, the reason for why we've had some of this dollar weakness has been catalyzed by the fact that there is unpredictability around the US administration's policy. We have had these concerns around Fed independence as well, and all of this has kind of almost come to a bit of a fruition. The stars have aligned there for the markets to trade a weaker dollar.
And there was talk of intervention in the yen on Friday, and again, lots of speculation as to whether the U.S. Treasury were going to lend a hand there, which was denied by Treasury Secretary Scott Bessent. But let me ask you what you think the path forward is for dollar yen, and whether they can actually be successful with non-verbal intervention, with actual intervention.
So we've seen plenty of intervention episodes from the authorities in Japan in the past, and often when that happens, we do see quite a sharp move lower in dollar yen. But that being said, there are a number of factors that are prevailing and will continue to persist even if the authorities step in to intervene. Those namely being concerns around the fiscal position in Japan. We have a government that is pursuing fiscal stimulus, and perhaps after the election, we could see even further fiscal stimulus being announced. And we think that should ultimately see the yen trade on a weaker path. So our bias would perhaps be more of a buy on dip for this dollar yen decline here. But because of the dollar weaker environment that we're in, we would prefer to express that in long euro yen as a cross.
Okay, yeah, I was going to ask you about the euro as well. We are getting very close to 120, which typically has been sort of this undisclosed number that ECB policymakers get quite uncomfortable with. Do you think we are now at the stage where perhaps the stronger euro, stronger Swiss franc can pose considerable headwinds to those economies?
I wouldn't say so, no. Of course, we've heard a couple of comments from a few of the members perhaps concerned around this level. But ultimately, we do think that euro dollar and the euro broadly can continue to strengthen here. And this is because the economic data is improving. And that will justify then markets having to price in more term premium in the rates curve and broadly better growth and inflation expectations. So actually having a slightly stronger euro may help to curtail some of the inflationary pressures down the line, and then may prevent then the ECB's need to hike too soon. But ultimately, we think that rising and improving growth should underpin a stronger euro, and we don't think that this negates a problem really for the Eurozone as a whole at this point. And I think in terms of the pathway, we do think that it can continue higher. We have a long euro dollar trade idea with a target of 122, but we've seen plenty of episodes like this in the past, perhaps 2018, even last year, where the momentum can carry on even without new economic data to warrant a further stronger euro here. So we think momentum, let alone the data, can take euro stronger from here.
Okay, so stronger euro and best expression for the yen is euro yen. The two big calls there. Parisha Saimbi, thank you so much. Asia FXLM Strategist at BNP Paribas. Well, coming up, it is a massive day for tech earnings. And while Meta and Tesla were rewarded, Microsoft was not. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, it's a massive day of tech earnings from Meta and Microsoft in the US to Samsung and SK Hynix in Asia. Despite a solid set of earnings, Microsoft sagged as capital expenditure surprised, and Meta also announced an expansion of capital spending and a beat on ad revenue. And shareholders loved it. Let's get more now with Annabelle Drewlers, Bloomberg's Asia tech reporter. Belle, well, a lot to unpack, and you look at the various price reactions and extended trading. Microsoft being punished by investors, but Meta doing quite well. What would you say are some of the key themes that emerged yesterday?
Yeah, I think it was really around CapEx, as you said, but it was also around how the underlying companies performed, or the underlying earnings essentially of the companies, because we are seeing just a broader pickup in spending across the board, capital expenditure across Microsoft, Meta and Tesla. But in terms of Meta's business, they actually had a better than expected sales outlook. And so that growth that they're seeing in ad spending in particular is going to be enough to offset that increase in CapEx essentially. Microsoft, where there were a lot of concerns, was that, yes, you've got, again, a huge increase in capital spending, but where you want to really see that ROI is in the Azure cloud service in particular. And we actually saw growth slowing in that from the previous quarter. So still strong at 38%, but again, just a bit of a slowdown. And so investors are obviously nervous about that. Are you seeing enough ROI? And then Tesla at the same time as well. You can see, again, a bit of a gain in late trade, but importantly, double what analysts or Wall Street had been expecting. CapEx of $20 billion tipped for this year. And that's as the company, again, had slightly better than expected numbers, and also pledged to continue that pivot from EVs into robotics and also into AI in particular.
Yeah, I was commenting off air earlier that it's amazing that Microsoft's cloud revenue business can still grow 38% and somehow that be disappointing to investors. It just tells you how high people's expectations are. But another theme that came up, and it's been a theme, I guess, for the better part of this year since you walked in, was the focus on memory chips. And it feels as though that really came up a lot yesterday with some of the CEO discussions.
Yeah, there's really a big looming crunch essentially, and we've already seen it in the last 3 months as well, because memory chip prices, what's happening essentially is that as there's a real need for HBM in particular, that's a type of DRAM, but essentially as there's that big need for HBM, companies or producers like SK Hynix and Samsung are repurposing their production lines, and so they're taking away supply of more typical DRAM that's needed for electronics, for instance, PCs and also smartphones. And so off that, there's sort of concerns broadly about supply in the market. And so we saw that being reflected by Microsoft, for instance, that said that they were having issues around memory chip, the crunch of that. We also heard Elon Musk saying that actually access to memory chips is a bigger issue, at least in the nearer term, than it is to AI chips. And then you also had the earnings that were out earlier. Well, we had SK Hynix and also Samsung. And you're just seeing, yes, these stocks are a bit under pressure. That's sort of normal in the Korean stock market, profit taking. But it's essentially you're coming off a very, very strong run up for both of these stocks. But they had huge profits in the latest period. So Samsung beating expectations, a more than 5-fold gain in profit. And then SK Hynix as well, its strongest quarterly results to date. And many analysts that we speak to and investors are saying really we could see memory chip prices in a multi-year bull cycle from here.
Annabelle, thank you so much. Annabelle Drewlers, Bloomberg's Asia tech reporter. And coming up, the record-breaking rally in commodities gains fresh momentum as gold, copper and silver all hit fresh record highs. We'll discuss that next. This is Bloomberg. Well, commodities are on a tear this morning, particularly metals. Copper is surging, as well as gold. For more, let's get to our metals reporter, Martin Ritchie in Shanghai. Well, this rally is showing no signs of letting up. Martin, how much of it is about the appeal of precious metals versus the underlying weakness of the USD that's taking place?
Yeah, as you say, quite extraordinary. Another quite extraordinary day and an extraordinary start to the year for metals markets. We've seen copper hit a record high above 14,000. I think it's last time I looked, it was up 7%, which is a very unusual move for copper. And as you said, gold and silver also at fresh record highs. If you're to put a kind of broad spin in this, the more bearish sentiment around the weaker dollar that we've seen over recent weeks has really fueled the rally. If you look at precious metals, I think we're getting into the kind of stage where there's a bit of lower liquidity. We've cited a few people in today's market report saying, banks don't have, infinite money to deal with the precious metals market. And when they're not as willing to be market participants, liquidity is lower, volatility is higher, and you might get these bigger price moves. Copper's a different story in the base metals, or the industrial metals. We've just seen absolutely massive surge in trading inside China and the futures exchange here in Shanghai. It's heading for by far the busiest month on record in terms of volumes. I think a lot of people are betting on, copper, aluminum, other metals being in short supply because you've got these big growth industries, robotics, artificial intelligence, power grids lying in the future. So a lot going on, and it's not a quiet start to the year at all.
No, most definitely not. Martin, thank you so much. Martin Ritchie in Shanghai, keeping a close eye on all of the action in some of those metals, both precious and base metals today. Now for a look at some of the other stories we're following. President Trump has warned Iran to make a nuclear deal with the U.S. or face military strikes, even worse than last year's. In a social media post, Trump says the fleet he's ordered to the region, led by an aircraft carrier, is ready to fulfill its mission with speed and violence if necessary. Iran's UN mission responded on X, warning if pushed, the country will defend itself and respond like never before. Russian President Vladimir Putin met with Syria's Ahmed Sharia in Moscow for the second time in less than 4 months. According to the Associated Press, Putin signaled Russia's readiness to help Syria's economy, while discussions also focused on the future of Russian military bases in Syria, which are a key foothold for Moscow in the Mediterranean. U.S., Danish, and Greenlandic officials have begun talks on a new framework deal for Greenland as Washington looks to address President Trump's demands for a stronger American presence in the Arctic. Danish officials say they're ready to negotiate and review cooperation with the U.S. on Greenland, as long as it stops short of questions about the island's sovereignty. And a look at equity futures. We had the Fed to digest yesterday, unchanged course on interest rates, but talking up of the economy. And then we also have all of those earnings that hit after hours, the likes of Microsoft, Meta, IBM, and Tesla. So NASDAQ pointed to open up in the green, up 0.3%. European markets also seen opening up in positive territory. Remember, we just had SAP earnings that we broke at the top of the show. And coming up, we're going to be speaking to Malik about Saudi Arabia. Good morning. This is Horizons Middle East and Africa, our top stories this morning. The Fed holds rates with Chair Jerome Powell pointing to an improving U.S. outlook as the labor market steadies. Powell also advised his successor to stay out of elected politics. Gold, copper, and silver hit all-time highs as a weaker dollar and rising geopolitical tensions provide fresh momentum. And the world's largest tech firms are ramping up spending on AI, Meta's $135 billion capex plans, boosting the likes of Samsung and SK Hynix. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's take a look at how some of these key markets are faring this morning. Yes, so just starting with that, S&P futures are up 0.1%. Yesterday, we briefly went above 7,000, but by the end of the day, we had dropped a little bit. But today, things are pointing up. A lot of focus on the Fed meeting, the fact that the Fed Chair Jerome Powell actually spoke up about the U.S. economy. He talked it up and really did not set the stage for further interest rate cuts. And we were just speaking to strategists from BNP Paribas who said that they're no longer expecting rate cuts for 2026. But of course, that could change depending on who the next Fed chair is going to be. NASDAQ also up 0.3% this morning, digesting some of the tech earnings that have come through. Meta posted strong trading and after hours extended trading posting positive gains. Not the case for Microsoft, which was punished by by investors, but we are seeing positive reaction in Tesla and IBM as well. So that means the aggregate index is also pointed to open up in the green. Take a look at Brent. So we've got $69 right now on the screen, up 1.4%. So we are creeping higher and higher with oil, keeping a close eye on geopolitical premium, with President Trump warning Iran that time is running out. The Armada is getting closer and closer, he's saying. And then gold, we were just speaking about that in the prior segment. Another record high through 5,500, 2.5% firmer. Silver also posting gains. Silver has actually had double the performance of gold this year. It's up 60%, gold up 30% just in the first month of January. And then copper this morning also up 5 to 6% as well. But let me just flag to you that with all of the money that's pouring in to commodities and into metals, commodity currencies are also gaining strongly as well. So this is the picture for some of those key currencies, so the likes of the Aussie, the Naki in Norway, the Brazilian currency as well. So all of them are benefiting from the fact that so much money has been going into commodity currencies more broadly. Okay, let's check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. Min Min.
Hey, Jumana. Yes, commodity is definitely taking center stage in Asia, but we are also digesting some of the key tech earnings that has come out overnight. We have Advantest reporting very strong earnings, raising its forecast, and we are seeing investors reacting to that, up 7.6%. SK Hynix also reporting its best quarterly earnings on record, and Samsung as well, very strong earnings, beating expectations, but we are seeing a dip here of about 2%, led by institutional selling. Retail investors are buying in, but even with Advantest, if you look at the broader tech sector in Tokyo, right, when you look at laser tech and other companies like Tokyo Electron, we are not really seeing the sort of broad-based rally in tech, so perhaps a bit of overheated sentiment in the AI sector. But flip the board, another area in Asia that is worrying investors is Indonesia, because we are seeing the MSCI Indonesia index down about 5% or so today after it resumed trading. Trading was paused for about half an hour after it plunged by 10%. Here you can see a big drop here, the biggest two-day slide since 1998, after MSCI had issued a warning about the fundamental investability of Indonesian stocks, citing concerns around transparency, the amount of stocks available from listed companies as well, prompting regulators to really look into this. They have until May when MSCI would reassess the index again, and we have the likes of UBS, Goldman Sachs also cutting their ratings for Indonesian stocks.
Min, thank you so much. Yes, Indonesia, some really interesting price action going on there. It seems to be a very idiosyncratic story. But of course, we're tracking the tech theme very closely. A man that many people want to hear from, Jensen Huang, NVIDIA CEO, is speaking right now in Taipei. He's speaking to reporters. He just came back from China. He said that the trip was very successful, that he met customers, he met government officials in China. Demand for the Rubin chip is incredibly strong. Energy is a big challenge for the US, Taiwan, and Europe, he's saying. They are working with Intel on a custom x86 processor, he's saying, and then also talking up NVIDIA's prospects for the rest of the year, saying the NVIDIA will grow substantially this year. And then also, this is very key, he hopes China can allow the H200 to be sold. There's been so much chat about whether this H200 can actually be sold into China. The requirements have been loosened from the US perspective, but then the question is whether China are actually going to allow their own companies to use that H200 chip. So he was just in China and is saying that it was a very successful trip to China. And just one thing on TSMC, obviously the world's biggest foundry, Jensen Huang saying that TSMC needs to add tremendous capacity over the next decade as well. All right, let's move back to the region. Saudi Arabia is ordering sweeping changes across its most ambitious projects, spread across Neom, Jeddah, and even Riyadh. This week began with delays to the 2029 Asian Winter Games. And officials have also been considering overhauls at two other splashy projects, the Line and the Mukab. Joining me now is Monica Malik, Chief Economist at Abu Dhabi Commercial Bank. Well, this just seems really a representation of the evolution of Saudi 2030. And I think the various officials that we've spoken to over the past year have been pretty transparent that they're starting to recalibrate, reprioritize certain projects. And now we're getting a better understanding of exactly which of those projects are being deprioritized. Does this make sense in your view, Monica? Are they making the right decisions here?
Good morning, Jemana. Absolutely, I believe that they are. We've been hearing about the recalibration of projects really since end of 2024 and particularly last year. There was already quite a lot of discussion around the Winter Asian Games over if the project would be completed in time, the costs and the technical aspects of it. So this didn't come as a surprise, and neither areas such as the line, which there's been a lot of discussion about. One of the key factors that Saudi has been facing is, of course, the lower oil prices, although the beginning of the year there's been quite a bit of support, but also the fact that the cost of the projects were going up and just the size of implementing so many large projects at the same time. I think taking stock, reducing cost pressures and focusing on important projects is critical. And of course, we're waiting for the new focus of the PIF. So that's something we'll be watching out for this year as well.
And Monica, how are you thinking all of this is going to impact the growth, especially the non-oil growth parts of the economy?
Well, we are seeing in 2025 some loss in momentum, and that includes on the investment side as we're having this recalibration. The project pipeline still remains large. There's, of course, the Expo that's going to be held in Riyadh, and the World Cup as well, the FIFA World Cup. And these are large projects. There's also increasingly a focus on technology and AI. So the project pipeline is still large. We still see strong momentum, but perhaps not as strong as seen post-pandemic. But, you know, I believe that having a more measured and solid pace of growth rather than moving at a very fast pace is actually positive, especially when considering the debt aspect and the sustainability of the growth and the fundamentals. So slightly slower growth, still solid, but more sustainable in the longer term.
Yeah, and the other development is the opening up of capital markets, of real estate to foreign owners, even some of the loosening of requirements in alcohol as well. So there are a whole bunch of other reforms that have been passed just in the last couple of months. To what extent do you think that might contribute to the economic prospects for the kingdom looking ahead to 2026 and beyond?
I think that the impact will certainly be felt this year and beyond, especially if we have an increase in the foreign ownership limit of stocks. That would have a significant impact in the near term, and also the liberalization of the real estate market. The fundamentals are very different in Saudi Arabia, large youth population, and of course, the fact that Mecca and Medina are in Saudi Arabia means that the dynamics are very, very different. To us, these reforms also highlight ongoing structural reforms, and that's positive for the longer term, but also the need to attract capital, both for the funding, the twin shortfalls, but also for the investment program. So we think this ongoing focus on structural reforms is very positive.
Yeah. One other, it feels to be the ambition that we've been discussing here at Bloomberg, and I spoke about it with our Saudi Bureau Chief, Christine Burke, yesterday, is tapping into other sources of funding on the private side. Yesterday, we penned a story about how the kingdom is perhaps looking to tap into the wealth of some of those family offices. They've also been looking for private-public partnerships. How successful do you think they're going to be in that domain?
Well, we have seen traction building on that area, public-private partnerships, but we've also seen private capital playing an important role. I think as we move away from these large Giga projects where perhaps the fundamentals of the projects were more uncertain, more into technology, more into revenue generating sectors, the ability of the private sector to play a larger role increases. So I think that also plays to that. But also I think what is important is that shift into projects that are going to provide returns and support ongoing growth and development. So I think, again, this new shift in focus will be important for attracting private capital.
Monica, thank you so much. Monica Malik, Chief Economist at ADCB. Well, Bloomberg has learned Live Golf is looking to sell minority stakes in its teams for the first time, targeting valuations of as much as $300 million. The Saudi-backed Golf League has hired Citigroup to run the sale process for stakes in 2 teams later this year. Live Golf executives say the goal is for the league's 13 franchises to each be worth $1 billion, with valuations driven by star golfers and media deals. And coming up, Africa's central banks begin a busy stretch of rate decisions. We'll tell you where rate cuts are on the cards next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Africa's central banks are kicking off a busy month of interest rate decisions, with a handful of countries expected to cut borrowing costs as inflation cools, while many others are likely to stay on hold. Policymakers are balancing the case for easing against external risks, including currency pressures and shifts in global investor sentiment. For more, we're now joined by Bloomberg's Monique Vanek. Monique, really good to have you on, and pretty timely as well. We had the Fed meeting yesterday. No rate cuts out of the U.S. central bank, but we did see the Ghana central bank cut interest rates to a 4-year low. Does that set the stage for other central banks in sub-Saharan Africa to also think about cutting?
Yes, indeed. So we saw Ghana cutting yesterday. We also saw Mozambique cutting yesterday. Both have inflation slowing, which gave them room to cut, and also have very high interest rates compared to the inflation rates. So some other economies that we are expecting to cut coming up is Nigeria. They have a similar story where inflation is slowing. We're also seeing Egypt, which has inflation that's been steady, and Kenya, where inflation is steady but much lower than historical levels. So they're also expected to cut. And also yesterday we had Zambian inflation coming out, which came below 10% for the first time in many years, which is going to be encouraging for them to cut as well. Similar reason, they also have a high interest rate compared to inflation.
And to your point, what you're seeing in many of these nations is the inflation rates have actually started to tick down. And I wonder how much some of that can be attributed to a weaker USD, which is benefiting a lot of the local currencies and in turn is helping to bring down that inflation rate. How much of a boost do you think that's going to provide to some of the central banks?
Yeah, so the weaker dollar has definitely helped African economies because in Nigeria's case, we've seen the currency after steep devaluation stabilize. We've seen other currencies like the kwacha in Zambia significantly appreciate against the dollar, so it has definitely helped. What's also helped African economies is the low oil price, because a lot of African economies are big importers of oil. So that's also helped, and transport costs fall. And what's also particularly interesting is today we have South African interest rates. And what's quite interesting there is that when we looked at the Bloomberg survey for all of last week and up until Monday, the forecast was for South Africa to cut. But there was a significant shift by Tuesday for majority of economists in our survey saying they're going to hold. And the reason therefore the expectation that they're going to hold is because of concerns of geopolitical risks and what those might mean for the oil price and for the rand.
So interesting. Yeah, I think a lot of people are keeping a close eye on what's been happening to the price of oil, with Brent back up at $69. So yes, most definitely geopolitical risks of concern there. Bloomberg's Monique Vanek, thank you so much. Well, coming up, former Fed Vice Chair and National Economic Council Director Lael Brainard says it's clear the Fed remains focused on its data-driven mandate. We hear from her next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Former U.S. National Economic Director Lael Brainard says Fed Chair Jerome Powell is looking at the data when making decisions. That's after the central bank held rates steady in its first pause since July. Okay, we will try to get back to that little piece of sound from Brainard in just a moment. But we actually have some breaking news. Nordea Bank, let me bring you the headlines from there. Nordea Bank fourth quarter net interest income has come in slightly above estimates, 1.77 billion euros versus 1.76 billion. Cost to income ratio excluding regulatory fees is around 45%, so quite low there. Nordea Bank sees a 2026 return on equity above 15%. The estimate was 14.8%, so again, above market expectations. Let me give you also some of the operating profit figures for the fourth quarter, coming in at 1.51 billion, in line with estimates. Net fee and commission income, 853. Total operating income, 2.95 billion versus estimates of 2.93 billion. And just an idea also on the expenses, they have come in at 1.39 billion versus estimates of 1.38 billion. So pretty much in line with estimates, if a tad stronger across the bottom line and also with respect to some of those expenses as well. Okay, let's go back to that tape that I mentioned, the former U.S. National Economic Director, Lael Brainard, speaking about Fed Chair Jerome Powell's decision.
The Federal Reserve is doing its job. It is staying out of the political fray. It is looking carefully at the data and making policy exactly on the lines that Congress told it to, which is to preserve a strong labor market, maximum employment, and to get inflation down to 2%. And I think that was the focus of the Federal Reserve Chair today in the press conference. Didn't allow himself to get distracted, didn't really get pulled into the political fray.
How much longer, though, do you think that the Fed can stay out of that political fray, especially as we approach May, when the president will have his pick of who to nominate to the Federal Reserve? Of course, the chair is just one of many votes, but even still, you have to imagine that ideologically they will fall in line with the president's thinking on interest rates.
Well, certainly that is important to the president. He has said that many times, that the chair that he selects needs to reflect his views. On the other hand, all of the candidates also will be looking carefully at the data. We heard a lot about the data today from Chair Powell. We saw that the statement reflected the fact that there's been an upgrade to the labor market. There's less concern now about unemployment. And so the new chair is going to have to get support from the remainder of the committee, that committee that's been in place for some time now, if he wants to take the committee in a very different direction, and he'll have to do it based on the dual mandate that was provided by Congress and based on the evolution of the outlook and the data.
I am curious, though, with regards to that data, Lael. I mean, he obviously, a lot of a big takeaway from the statement in the press conference was the idea that the economy is kind of a surprisingly stronger. I think I'm kind of paraphrasing his words there than what they thought. So a little bit more stabilization in the labor market. But then towards the end of that press conference, he started talking about, I think what a lot of us has talked about, this K-shaped economy, the idea that, yeah, overall we're doing good, but there is some bifurcation. And I'm wondering if it's the Fed's job to address that, or do they ignore that and just focus on the aggregate?
Well, we're certainly seeing this divergence with strong aggregate growth clearly being driven by the AI boom, the boom in data centers, in semiconductors, in AI infrastructure. But on the other hand, we're seeing the labor market basically treading water, with low hiring, low firing being kind of the characterization really of the last several months in the labor market. market. And in consumer sentiment, we saw yesterday that the combination of high prices and diminished job opportunities are leading to some real concern on the part of consumers with the lowest consumer sentiment since 2014, which is a little hard to understand given the pandemic. But the job of the Federal Reserve is to focus on the overall labor market, and it does look like the labor market is in pretty good balance. It certainly has stabilized.
That was former U.S. National Economic Director Lael Brainard. Now for a look at some of the other stories we're following. South Africa has appointed a retired judge to lead an inquiry into Iran's participation in naval drills held off the coast of Cape Town. The investigation will examine whether President Cyril Ramaphosa's instructions regarding Iran's involvement were properly followed. Nigeria says it aims to more than double its trade with Turkey to $5 billion. The two countries have set up a joint committee to boost investment following talks during President Bola Tinubu's visit to Ankara. Trade between Nigeria and Turkey currently stands at about $2 billion, with no time frame given for reaching the new target. And a look at markets as we round up the show. U.S. equities pointed to open up in the green. S&P futures up about 15 basis points, and Nasdaq up 30, building on from some of those positive tech results that we had yesterday. So that's going to be the theme for the rest of the day. That's it for Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai.